This is Martin from Secrets, channel for learning about trading and investing. Welcome to Quick Stock Market Analysis Show, where we look at the technical charts and then try to understand what happened during the day and plan for a better trade for the upcoming trading day. That's January 11th, Thursday, 2024. So we had a buy on dips day. Market did furthermore after 2 days of deep red, furthermore down, but quickly reversed and recovered. Most of them managed to close green. That's what happened today. Let's come to the wrap up after we look at the charts. We will first look at the plain candles. So here we go, daily charts. So it's a green and it is a big size, which is slightly longer because of the fact that it did dip, and we can very well see that it's consolidating since last several days. 7 or 8 days it's consolidating within a range. Banknifty also, it's a green. It did not form a piercing candle, which would have been bullish if it managed to move a little more up or more than half the previous red candle, but it didn't happen. But the candle is wide range and it's green and it's bullish, and you can very well see that the morning we had a dip in the reversal, right? But Bank's Nifty was an expiry weekly. Expired today, so it did not gain as much as the Nifty did. Right? Flattish 0.25, 118 points up. And if you enable this channel, you can see that it is well within a range. Right? Nifty seems to be much more stronger with the 20 exponential moving average, right below, behaving as good support. Market has been touching the same zone of 2400 3-4 times for 5 times in that range. It seems to be consolidating confirmed, and it's at the very top of a trend line channel, retracing from the basically. Banknifty also, since the very top of the trend channel, is a nice 3.5%, 3.3% retracement has happened. Market is taking a support and then bounced after the quick dip in the morning. And Banknifty expiry day is very crucial to see if the market is further going down to this candle low or not. Right, so that's exactly what happened. It is a buy on dips day, and market is clearly consolidating with the range. Levels, if you see, remains the same for the Nifty. 21,834 will be the major resistance on the upside, and after that 22k major resistance up in between. 21,900 also could come in with resistance. Downside supports 2400 is a 20 exponential moving average. Good supports can be found, and after that 23.6 Fibonacci extension level is at 21,125 levels. 21,050 also is 61 Fibonacci extension level, so that confirms 21,000 to 21,125. So that zone would be a very good support zone. If that's breached, then we go to the gap at 2700, which also has a 50 exponential moving average at 2800. So worst scenarios, it may not happen tomorrow. Coming days, worst scenario, it can go to 27. For tomorrow, it may be holding on the 21k even if the dip happens, and close much above that probably. Even if it breaks down, it may find some support at the 21,100. It may not even come to the 21k. So that's a Banknifty, and that's a Nifty. Banknifty, the upside, the first resistance will be the 20 exponential moving average. That's 47,477. After that, 47,750 could be some kind of resistance, and then 47,500 is where the 20 exponential moving average resistance is. 47,750 and 48k. Rounding, big rounding number, that's resistance zone, and then after that 48, 600, 500, that's all. But all time highs are the resistance zones. Downside, first major support breach of today's candle low would find next support at 46,500 zones. It's also a confluence of 50 exponential moving average, so it can act as a good support. If that is breached, then 46,000 would be where it would settle. That would be the bottom of the parallel channel also, where it's a confluence of multiple supports, so that can hold a good scenario for tomorrow. It may find support at 46,500 if it dips further down. On the upside, it may struggle to close above the 20 exponential moving average, which is climbing up. So that's the levels. Let's just come back to the wrap up. So a 74 point gain, clean day on the Nifty. Bounce up for a dip in the morning. Managed to close green on both indices. About 21,600 on Nifty and about 47,300. But Banknifty had lost 20 exponential moving average, while Nifty still holds comfortably above that. Both are in a range. Remember, we are in a rally of 26-30%, and the last swing high itself rally is around 16%. Intraday price action was down move and then reversal. Good reversal happened on Nifty, but not in Banknifty, where it went range mode after some recovery from the dips. A fire selling was about 1,000 crores in air buying happened yesterday, while DI buying happened of 100 crores. Today data has not come in. We'll quickly check while we are doing this video. Today's Jan 10th, data has not come in yet, so we'll have to check that. Subscribe to my Twitch channel where I will be posting that when it comes. So that's about this institutional support is there, otherwise market cannot hold in. But selling also, profit booking is happening from the domestic institutional side, and the retail is also slightly bearish. On the short term, we talk resistance support level we already talked about. I'm not repeating that. Momentum is bullish in the Nifty, no doubt about that, but it remains sideways and rising up in the case of Banknifty. Even bullish momentum on the Nifty also is in the rising up mode. Two short-term charts, and trend is where there is some trouble. See, in the short-term daily charts, trend has crossed over to the zones on Nifty as well as the Banknifty, both, which was holding on the bull zones till yesterday. So the trend is slightly lifted after today. The gap also was cleared in the Nifty support, which was acting as support earlier, just above the 20 exponential moving average. But 20 exponential moving average holds good. Mix is cooling off, the market is climbing up, is okay. Flat is close, 2.2%, 12.97. Still a lot of space to cool off, considering that market is more substantially vertically up. Bands, Bollinger Bands, we're talking about that. This gives an indication that there is contraction that has begun and confirmed on both indices. It indicates sideways movement may be there expected on the, we're talking about short-term daily charts. So overall, technically the charts are bullish still. Correction has come in. It's quite normal from the all-time highs, remember that. But it's only less than 3.5% and hardly 1.7% on the case of Nifty. So it's very less concerning vertical moves. So we got two deep red days yesterday and day 4. Today some green has come on bounce up. Changeable already bounced to the previous breakout zone. Could act has acted as a support and then slightly bounce up, and that bounce up can furthermore is what could be expected technically. But you need to be cautious because collections more could be due. The range could, if it breaks, or if the price moves below today's candle, then we have trouble. It indicates the correction reduction to 5%. So if you see the different industrial sectors, none of them are close green except the FMCG and the realty sectors. The momentum on all the major industrial sectors are all bullish, except the IT and the metal, that's up in the sideways slightly. The heavyweight stocks, 5 critical stocks that contribute maximum to the index, are all close green except 3 of them: Infi, ITC, and Kodak Bank. Rest is all flattish, correct. And with respect to the short-term momentum on the daily charts, you can see that they are all sideways. None of them are in the bull zones except the Reliance. So Reliance alone is holding the market. You need more leaders in the heavyweights for the market to So it will move up and it will be sideways. So that's about the heavyweights and indices sectors. The model market US is showing some flattish green on the top. It had recovered previous day, and it had been rallying like a market and did a very small correction, quickly recovered back to green. So that's positive. Dollar is slightly red, and the rupee also remains to be weak, above 83 plus. Crude oil is spiking up, but it's at the 72 kind of levels. Remember, it had went to the 93 plus, 90 plus kind of levels, and then retraced so far to 70 below. It was consolidating, but a green spike is seen there today. Gold also had made all-time highs and then got solved into resistance and then consolidating with a green today. So it's time for buying investing. Buy on dips in quality stocks in small SIP mode could be helpful, or else we'll wait forever for larger corrections which may not happen. And so overall direction for the trade is still clear. It's uptrend. It's not sideways confirmed fully, so we'll have to wait and do the directional strategies instead of non-directional, ideally. And if you're an expert, non-directional is in favor of option sellers because of the fact that the volatility to realized volatility spread difference is in the mid-range, and it's favorable to the option sellers, generally speaking, if you're an expert. But otherwise, when the direction is not sideways, it's better to do the directional trades, or rather directional spreads also may help. The key thing is when this spike may hitting at 20, you just have to cut short a portion size and play it safe. Manage your risk and don't carry forward overnight portions without hedging. That's all we can do. Manage your risk. That's all I have. If you're not subscribed and watching this, please subscribe and share to your friends and colleagues. Give me feedback and comments and all. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.